The Joburg studio is Karanta Kelly, who is Director of Sub-Saharan Africa Economics at IHS Global Insight, talking about stress testing Sub-Saharan Africa. Karanta, welcome to the Power Lunch Joburg studio.
Thank
you.
How
on earth do you stress test a whole region?
Well, basically, what we're trying to do, or what we have tried to do, actually, is to look at some of the triggers of to instability in Sub-Saharan Africa. In other words, what are the factors that heavily impinge on development in Sub-Saharan Africa? These factors are both economics, and political. Economics, for example, commodity dependence, which is very significant in many Sub-Saharan African countries. They range, as low as maybe 30-35% in some of the smaller economies, to anywhere between 95 or even 99.9% in some of the newly independent countries like South Sudan. So, given the commodity dependence, the heavy commodity dependence of these countries, whenever there's any event in the world economy that puts or kind of dampens the prices of Africa's commodity exports, it does have a major impact on growth on the continent. If we go back to 2009, when oil prices, for example, dropped to around $38 a barrel in February of 2009, growth in Sub-Saharan Africa actually tumbled from 6.1% in the previous year to about 2.4% in 2009, that particular year. So commodity dependence, is one area we look at very closely. The second, obviously, is the other developments, in the global economy. For example, the Eurozone crisis. Many African countries still are major trading partners, major trading partners of the Eurozone economies, or the other way around. Eurozone economies, are destinations of a lot of Africa's major exports. And as a result, whenever there is a slowdown or a significant slowdown in these economies, it does have an impact on African economies, as well. It could affect, for example, trade, in other words, a trade effect, in which case trade, in commodities especially, slows down significantly, and that does impact, negatively on the African countries. They can also.
Let's just go back, if I can, Karanta. Sorry to interrupt you. Let's go back to the commodity aspect, because
right.
It's terribly important. I mean, if you were in South Africa in 1970, for example, when this economy was producing 1,000 tons of gold at its absolute peak. I mean, if the gold price fell, if we were in an open economy, which we weren't at the time, if it had fallen $20, that would have had a major impact, and that would have been part of a stress test that you would have had to do. If you look at the Ivory Coast, for example, now, if the price of cocoa falls off a cliff, then the Ivory Coast is impacted. What it really does, I mean, it's all very well saying, well, there's a stress test and this is what will happen, but I think what comes out of a stress test that is so useful is that it really does highlight the importance of diversifying Africa's sub-Saharan economies because of the risks that your stress test throws up.
Yes, diversifying these economies obviously is a sine qua non, for almost any significant development in the growth environment. Right now, the commodity dependence, is a major factor. And even with South Africa, which is maybe the most diversified, of the economies in Sub-Saharan Africa, commodity dependence, is almost at 65%. So none of the countries are actually immune. And as I said again, commodity dependence is key. Now, whether you look at it from the Eurozone crisis or whether you look at it from the slowdown in China, China's GDP, real GDP growth in the last quarter came to about 7.6%, which is like almost a 6-year low. Now China's impact on the demand side of the commodity equation has intensified quite significantly in the past several years. Oil, for example, China is now the second largest consumer at 9.5 million barrels. Copper, again, copper, iron ore, and commodities of that nature are also very big in China's demand package. So net, whenever commodity prices are impacted, negatively or positively, they do impact the growth environment in Sub-Saharan Africa. Now,
quite right. I mean, Karencha, I'll have to interrupt you again. I just want to talk about that China number, 7.6% GDP growth in the quarter announced in the last few hours. We've spoken about that. That's the sort of thing that we can't have any control over in South Africa and in Sub-Saharan Africa. But there are certain things that we can have control over, and we can de-stress ourselves, if you like. For example, politics. We talked a lot about economics, but what about the political risk, the political stress that sometimes rears its ugly head in our region?
That is the second part of our stress test. The first part was the economics, the commodity prices, the Eurozone, the China effect. But the second part, and maybe more importantly, is the political aspect. Right now, between now and the end of 2013, we are going to face anywhere between 13 to 15 elections in various African countries. And the history teaches us that, or has taught us recently, that even in African countries, like Mali, for example, which were fairly stable, politically, came under attack, by these, soldiers, who conducted, a severe coup d'etat, massive coup d'etat. So even though progress has been made, I mean, to really see what progress actually has been made, you really have to look at Africa's political environment over time series. Okay. In other words, go 20 years back. Where was Africa? If you look at that whole period, you're looking at countries under military dictatorship. Nigeria was, Ghana was, Sierra Leone was in a civil war. Cote d'Ivoire, again, on a civil war, they got out of it. Liberia went through 2 rounds of a civil war. So net, unless there is some significant amount of democratic participation and political stability in these countries, there is not really much, that they can do to minimize the stress. Okay.
Karencha, thanks so much for your time this afternoon. It's interesting stuff. I hope your stress tests do actually help us, as I say, in the economic front, sort of diversify our economies, and also hopefully the politicians will be listening as well, because the less stress we get from them, the better. That's Karencha Kali, who's the Director of Sub-Saharan Africa Economics at IHS Global Insight.